Good morning, Andrew Wielandt, Michael Doherty, Dornbush Partners. Welcome to instalment 7, 8.
We're moving along.
We're moving along. Interesting sort of week, Michael, and I know you and I have been spending a heap of time talking about Medibank, to be honest, so we were just saying before, what are we going to talk about, because we know a lot about Medibank and not a lot else, but let's talk about Medibank. You've had much interest?
Been a lot of interest, Andrew. I think, the amount of advertising, of course, it's been the biggest float we've seen for many a moon. A lot of interest. You know, of course, here in the office we got enormously scaled back, so the retail broking side of things didn't really get looked after too much, which hopefully then bodes well, I guess, for people that apply through the general offer. Not that I think they're going to get close to maybe what they applied for, but it should be a little bit more generous, certainly, than what we got. But all in all, a lot of interest, a lot of applications people have been putting through, and we've been doing a few, of course, online as well. So it certainly drummed up some interest.
And what's the listing date?
Listing date is the 25th. November, so we're not too far away now. Sure. People that applied through the general application, of course, know that Medibank pretty much took their money out straight away, and they'll sit on that for a few weeks and obviously crunch the numbers and work out who gets what and what the final listing price will be. Of course, that'll be obviously a key piece of information. Flying in a little bit blind, obviously, without knowing those sorts of details beforehand. But
it's a pretty big range, isn't it? $1.55 to $2. We're thinking $2 is probably a reasonable guess. Estimate, but you're right, 25 November is sort of when we find out as to how that's travelling. Energy sector, absolutely copping it at the moment. Not a lot of fun there at all. Have you been, as I said, we've been doing a lot of Medibank this week, but have you been sort of looking at that sector at all? Oh,
it's been an interesting sector, absolutely, Andrew. I mean, West Texas Intermediate at 74, Brent crude, which is the European benchmark pricing, I think is around about 77. Of course, it wasn't too long ago that Brent was trading about $15 or so ahead of West Texas Intermediate. So, no, oil prices dropped dramatically in the last month or so, and of course that's had a flow on to the likes of Santos. Woodside hasn't been too bad, but certainly some of those smaller players, as you know, have really been knocked around the chops, so to speak.
And it's interesting, isn't it, that as that oil price comes down, it starts putting a lot of pressure on those LNG projects. We were really fortunate from an Australian point of view that when all these projects in Queensland in particular were approved, the gas price was, or the differential was much higher, because below $80 a barrel it starts making those gas projects a lot more uneconomic. And like Woodside was looking at doing a couple of projects, they've backed right off as well, which is why they've got that 6% dividend at the moment. The energy sector, not a lot of fun. Any shares you're looking at, Michael?
Yeah, been keeping a bit of an eye on UGL. UGL's been very kind to us over a long period of time, but certainly in the last couple of years, like a lot of these engineering, construction type companies, has struggled a fair bit. UGL recently sold that DTZ, that property management business, which they did very well out of. They're going to clear about $1 billion. I think they picked it up for about 100 million during the GFC, so they've made reasonable profit, well, fantastic profit on that, but they have sold that, cleared about $1 billion, so shareholders are going to get a $3 per share capital return. They announced that at the AGM there the other day, but Andrew, on the downside, and I guess certainly linked to this energy sort of talk, I guess, is they're involved in the Ichthys development over there in WA. They're a joint venture partner in the power station development over there. Big write down in profit forecasts, 175 million, or 170 million rather. UGL's a 50% JV partner, so 85 million they're going to cut off their bottom line. So share prices reflected that's tanked in the last few days. So well worth keeping an eye on. I think if you're a UGL shareholder, you may hold just to get that capital return and certainly reassess once the dust has settled on that.
Okay. Probably the only one I've been looking at as we wind up today is Woolies. Woolies is one of my favourite companies. They came out early last week rather with a bit of a profit warning. Margins are only the profit growth is only 2% relative to, say, Wesfarmers or Coles at around 5%. They're going to probably cop a $50 million hit to the bottom line, which is a significant sum of money, but in the context of a $2.6 billion profit, it's not really. Share price between that and the Masters mess has come off around $4 or $5 at around $33, $34. That's one that I've been buying a lot of. So certainly, you know, if you want to have a chat United, Woolies, any one of those, have a chat to Michael, Dan or I. We'll point you in the right direction. Michael, anything else you want to cover off on?
No, been a big week, Andrew, so I'm glad to see Friday roll around. And yeah, mate, no, we'll reassess over the weekend and back into it next week.
You and me both, mate. Have a great week. Thank you.